My guess is in the long run, and Eric Balchunas said this, right? He did the math. There's $30 trillion controlled by advisors at these big allocation shops. If 1% comes in to Bitcoin through the ETFs, that's $300 billion on an asset that trades about $10 billion a day.
Hey guys, welcome back to Everyday Finance. In this video, Yusko discuss about Bitcoin ETF and other crypto, according to Yusko, in the long run. And Eric Balchunas was right when he said this. There's a $30 trillion doll that managers at these big banks play with shops that give out Bitcoin if 1% comes in through the ETFs. That's $300 billion on something that moves every day for $10 billion. That's going to have a huge effect on prices to make sure that Bitcoin stays popular in the long run. Services for money. The most important thing it will do is soak up all of the mining will bring in more supply over the next few years. And Yusko made a big sentence, and he may not be right, but he think he made it more fiats will be changed to this year, 2024. Bitcoin is worth more now than it was 15 years ago. That's not that far of a stretch. We have a $900 billion doll market. You know, Cap? But most of that isn't money that came in right now when it cost $10,000. About $1 billion came in through Bitcoin, and the price went up to almost $660,000. That means that a big chunk of the market cap is actually just the rise in value of the original hodlers and miners. So Yusko should probably look up the exact number of how much fiat has changed hands for into Bitcoin since the beginning, but he think $300 billion, which could come in over the next year, would be close. And lots of things Yusko discuss, so please watch the video to end. And share this video, and subscribe our channel Everyday Finance, thanks.
Gold market. I mean, the gold market is famous for this, right? All the GLD longs, I shouldn't say all, many of the GLD longs are just offset by shorts from JP Morgan and Rothschild Bank in London, and they can manipulate the price of gold. And the thing I love about it is they're not doing that. Like, well, JP Morgan actually admitted to doing it. They actually paid a fine of $960 million, almost $1 billion 2 years ago. But I love their comment. They're like, yeah, we paid the fine, but we didn't have to admit guilt. I love that part. You can pay $1 billion and not admit guilt. But funny. We made $20 billion, so it's like a cost of doing business.
That's crazy.
So it's crazy. But that's a really long-winded way of saying, I think in the original plan, again, my belief, I'm entitled to my belief. I believe the original plan was they were going to punt everybody else, give BlackRock the go-ahead. BlackRock was going to accumulate these big positions. The banks, the JP Morgans, et cetera, would take the other side, short the futures. And part of the reason people think that the launch was a failure is that's precisely what happened for the first week. Right? You had the people come in before. We went from 40K to 47. We had that nice parabolic rise. And then you had the launch. And it was interesting, very underreported. I tweeted about this, but no one cared. There was a launch of a second futures contract precisely on January 11th, the exact same day as the approval of the ETFs. So you basically had a whole bunch of people shorting futures against these longs, and you had the liquidation of GBTC shares because they had high prices, and people who didn't have a tax problem were like, I'm out and I'll transfer. So you had a combination of factors that pushed prices down. People were like, oh my God, it's a failure. Like, no, you're missing the forest for the trees. You bring up the point, right? There are groups, Fidelity being one, and eventually all of them, have said, we're going to put in 1%. Now, Vanguard, Bank of America, Merrill Lynch, LPL this morning, UBS have all said, nope, this is still too risky. Now, what that is code for is Ms. Warren called them up and said, do not allow your clients
Is that confirmed,
to use
Mark?
their own money.
Is that confirmed?
Come on. I mean, if you look at the largest campaign contributors to Ms. Warren, you will find a stunning similarity to the largest financial services companies in the country.
Mark Yusko still think that this way of passing the ETF is the right way to do it. BlackRock, being the biggest, has ties to a foolish move to take over the markets. The head of the Chicago Mercantile Exchange said that he would tame Bitcoin like a dog. Have you seen the video? BTC will not be tamed by you. You do know that, and that's why he says that for years, any good with futures has been able to be manipulated. In the old days, Mark Yusko had to have title to the barrel of oil he wanted to sell you in order to do so to get that oil. He had to be able to go get that real barrel of oil and bring it to you. There were places to take deliveries, we could do business, and then they made the what a world of futures. Now he can make a barrel of oil appear out of nowhere. There doesn't even have to be oil, and Yusko promised to bring it to you, and as long as the deal is done before the date, Mark Yusko don't have to for someone to buy oil from and bring it to you on a tanker truck so that it can be sent up to City of Chicago. So what happens is, you get short and naked on the other side. You can get what many people said about being naked for a long time. Paper barrels appear out of nowhere. And in the end, all of these product markets get a big because of the creation of these paper commodities. There is an imbalance between supply and demand. You can see this in the oil market, the food market, the gold market, and more. Let's back to the Mark Yusko interview.
And that's not hard to believe.
And
that's not hard to believe, Mark, because...
And then you'll also notice...
Go ahead.
You'll notice that there's a link between those institutions that said you can't buy an asset with your own money. This is the dirty little secret of banks and brokerages. Once you give a broker your money, it's no longer your money. It's their money. And they can permit you to make trades if they so desire, but they can also prohibit you from making trades. And so I think a lot of people will leave places like Vanguard, UBS, Merrill Lynch, because they realize, wait a second, what do you mean I can't buy this thing that I want to buy? The flip side of that, I think, is interesting. Someone said, well, okay, that's all well and good, but what Vanguard's doing is actually intelligent. They want to be the boomer firm, right? They want to be the low cost, boring, no speculative assets. And therefore, what they're saying is, okay, we'll lose a few young people who don't have a lot of money, but we'll keep all the boomers, and maybe we'll even get some more boomers who say, oh yeah, well, those whippersnappers and their Ponzi scheme Bitcoin, we don't want that.
The whippersnappers.
So we'll see. My guess is, in the long run, and Eric Balchunas said this, right? He did the math. There's $30 trillion controlled by advisors at these big allocation shops. If 1% comes in to Bitcoin through the ETFs, that's $300 billion on an asset that trades about $10 billion a day. That will have a massive price impact. It will also solidify the long-term kind of penetration of Bitcoin into financial services. But most importantly, what it'll do is it'll sop up all of the incremental supply from mining for the next few years. And I made a big statement, and I might not turn out to be right, but I still made it. I believe this year, in 2024, more fiat will be converted to Bitcoin than all the previous 15 years.
Wow.
Which is not that big a stretch because, we've got about a $900 billion market cap. But most of that isn't money that came in.
Right.
right? When it was $10,000 price, about $10 billion came in through GBTC, and the price moved to almost $60,000. So much of that market cap is actually just price appreciation of the original hodlers and miners. And so I don't know the exact number, I probably should, of how much fiat has converted into Bitcoin since inception. But I think 300 billion, which could come in over the next year, would probably be close.
According to Mark Yusko, Bitcoin isn't that great right now, and Mark Yusko don't have to meet someone in a dark alley and risk getting hit over the head with a wrench to buy it. It's not as bad as it used to be. Is this crazy? Yusko don't know if this is true, but it's still hard stats. Like 85% of them are made up on the spot that makes sense. But he saw someone post that of the 19 million Bitcoin that have 5 million have been mined and are lost or stolen at this point. That's crazy. They're impossible to get because of password or seed phrase issues, or they've been soiled by bad deals or something. That's a lot. 5 out of 19 is a lot of people own Bitcoin through an ETF. Mark Yusko said, "People tell me, you don't own Bitcoin? Tell my dad that he doesn't own Bitcoin too, and he'll understand how the price changes. He officially owns Bitcoin. He doesn't actually own it himself, but he does own a rapper who does together. They own Bitcoin, which is different from futures, where you don't own Bitcoin, but rather paper. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.